Good afternoon, Yusuf. As you can see, I am pitching a strong outperformance on Apple. I am sure you all know what the company does and their business model, so I'm gonna get right into the quantitative stuff. I'd like to start off with drawing your attention to the cash flow pro forma of the tear sheet. My first assumption for the base case involved picking a revenue growth number, and I believe that my estimates are on the conservative side of the consensus that I read in the various reports and factor in gradual expansion into emerging markets with a marginal loss of revenue from revenue sources from North America. I'd like to highlight that currently 43% of the revenues come from North America, 11% from China, and 46% from the rest of the world. Moving on to the margins and profitability, I believe that the margins will remain fairly stable, but I have factored in some setup costs in emerging markets which would shrink profitability and but due to the overall larger revenue uh, have a net positive impact on NOI and EPS. In my base case, which you can see on the tear sheet, I have shown EPS growing firstly through the gradual reduction in the outstanding shares due to buybacks at a rate of about 4% per year, which has been half of the last 2 years' buybacks, and also due to the steady gradual increase in NOI. Before I get into the catalyst, I'd like to talk about the base case DCF, where I predict my target price to be $632, which is a 12% upside, with a bear case scenario of a terminal growth of 0.5% and revenue growth of 0% through the planning period, and which would lead Apple to have a target price of $514, and finally a bull case where EPS would be growing through strong share buybacks and revenue growth with minimal teething issues in Asia and emerging markets, and lead to a target price of $753 or 35% upside. The major catalysts to Apple's strong performance in the year to come are shown through the sales which took place in Thanksgiving. At an alarming rate of one iPad sold every second, Apple has officially announced that the January earnings would be on the higher band of the guidance provided. These strong sales don't come as a surprise. It is all a function of the amazing brand value that Apple has, which now, according to Forbes, is worth over $100 billion due to its elite and premium image. Another interesting statistic is that the marginally cheaper 5C has been able to draw customers away from LG and Samsung, with 50% of the customers being new clients to Apple, while the 5S has retained the original premium clientele, with 80% being returning customers. Uh, Apple is now making solid roots in emerging markets like China and India. China primarily through its deal with China Mobile, which would give it access to over 700 million subscribers. Uh, Agreed, not all of which would convert to iPhones, but it would be a good start for the company going forward. Um, the dominance of Apple is unparalleled in the tablet market across all price points. This gives Apple a great source of consistent cash flow, and this cash flow has now amassed to over $150 billion, and gives Apple and its executive board the option to acquire and grow through acquisition, or pump more capital into R&D, or finally buy back shares. As most of you all must have heard about Carl Icahn's demands of Apple's executive board to sanction a $50 billion buyback of shares, which would have a very strongly significant impact on earnings through the which would have a positive impact on share price through through an upward push in EPS. But as discussed in class, the share buyback should only be done if the shares are available below intrinsic value. But this gives us as investors a positive outlook on the stock, because it reduces the downside risk, knowing that the company would provide a floor to the stock. It provides an asymmetric trade in the favor of the long position. I end my pitch with a strong buy recommendation on Apple. With its earnings release coming at the end of Jan, it seems to be at an attractive price despite its recent run-up. It is trading at a forward PE of 11.88, EV to sales of 2.5, and EV to EBITDA of 8.26, which are all below peers. I believe that the company is poised to continue to beat market, as you can see in the 5-year chart attached, and has momentum both on fundamental and technical grounds to garner strong returns over the holiday period and going into 2014. I'm open to questions via phone call or email. Thank you so much.